So I've got I've worked it into a whole book project right now, and it features Doug the border terrier, and the idea that out walking, that you see these signs, and you have to be watching closely, and you have to be making sure that you understand what the signs mean. But you can see it coming in advance, and I honestly I think it's the best Bitcoin analogy I can think of. It's just that we know the supply shock is probably coming, with one caveat which we can talk about later. But it's coming. We know that every circle around, there's going to be people peeling off Bitcoin that goes literally into permanent storage. And so there's a really strong likelihood that supply shock does happen. It's an absolutely fixed supply commodity. The world has never seen that before. So it doesn't, we talked about this last time, I think, and to me, it just doesn't make any sense that we're going to not see some sort of really massive move up in the future. And the question then is, well, where does it actually, if that happens, where does it actually end? Because once the supply is gone, it's gone. There's nothing else you can do about it.
How much has actually, as you said before, strategy and those institutions that they don't look for selling Bitcoin, they just want to acquire as many Bitcoin as possible. And as long as they are liquid to do so, they will do it. Where when you look at Bitcoin 10 years ago, or maybe 5 to 8 years ago, there weren't that many institutions and companies involved, like almost none. I mean, already now also we are in the early stages of that development. But they do change the price demand equation a little bit, I guess, where they just buy it no matter what. I don't think Saylor will slow down if Bitcoin is at 1 million. And he will just continue to execute his thing, where if there's a blab, like how the market was in 2012, 13, 14, he might have sold or retired or used the money otherwise.
Yeah, and you look at particularly at Strategy, and with their new products, with their replication of a curve, like a credit curve. That's not the correct term. Anyway, with all the different financial products that they're bringing.
You mean yield?
Yeah, yield. Yeah. But all the different products that they're bringing in right now. So you might say, well, maybe Michael Saylor will keep buying forever. But say that they start taking, MicroStrategy starts really seriously cutting into the bond market. Well, the bond market's a finite market. I mean, you're still, if Bitcoin becomes this pristine collateral that can be used to siphon off the treasuries market, or the real estate market, or the equities market, there's only a certain distance that can go. And so I don't know, in one way I look at it and I think a price or a supply shock seems inevitable. But then the big question, I think, and this is actually another paper that we're working on right now, is what happens in the face of futures, derivatives, and synthetic exposure. And so there's this sort of cleavage to, does Bitcoin follow its traditional path, sort of, and its original ethos about being decentralized, about self-sovereignty? Is self-sovereignty really the thing that drives adoption forward? Or do we get into this world where we have Bitcoin gets financialized and absorbed by Wall Street, which it sort of looks like that's what's happening in some ways right now. And there's some, within the price modeling paper, there's one really interesting thing that came up. And I'm not sure if this is some sort of mathematical anomaly or a modeling anomaly yet, but what it shows is that if we get into this heavy trade, so if we have this withdrawal sensitivity relatively high, well, actually, I shouldn't even say that. It's even in the medium of the range to the lower part of the range. If we have some sort of sensitivity where firms don't buy as much Bitcoin when price goes up. That can keep liquidity in the market. And particularly if the price goes up very fast, it can throttle back the number of purchases really quickly, depending on what's going on there. Whereas with a sort of a self-sovereignty first view, what might happen is that Bitcoin in that type of world where there's not much financialization, where there's no paper Bitcoin, the price might go up slower. But what happens is that supply being removed is actually supply that is actually taken permanently out of liquid supply. And so there's this anomaly that came out in the modeling, was that you can actually have slower withdrawals of Bitcoin into reserves, or actually into probably more likely wallets. And the probability of some sort of hyperbolic price singularity actually increases when your withdrawals are lower over time, up to a certain point. And with Bitcoin, if we look back to, say, 2017, 2019 period, the supply seemed to be like getting drawn down this whole time. And then once it started to go up into, like in the big bull run, there was just no supply that was available at that time to come back into the market and moderate. Now, eventually the supply showed up again, because once Bitcoin hit up into the $60,000 range, people were willing to sell it, like you said before. And if we look at historically at gold, we've seen in the 1970s, 1980s, there was this sort of similar process happening with gold, where it was slowly taken out of the market into private hands, and then there was a big squeeze. We've seen it also in silver, where derivatives also played into the picture with the silver squeeze. But yeah, it's like I follow the math, so I don't for me, I don't put much weight on what's happened historically with Bitcoin price trajectories. I want to understand what are the fundamental mechanisms as we move forward, what's going to influence the price in the future. And there's many uncertainties that I think modeling wise we can deal with, but there's these sort of fundamental, it comes back to this very fundamental sort of the Bitcoin ethos versus the Wall Street ethos. And I think if we go one way, we're definitely going to get supply shocks. If we go the other way, maybe we will, maybe we won't, or maybe they'll be delayed. The thing with the derivative strategy and paper Bitcoin is it helps to fill that. It provides a means to fill demand and provide Bitcoin exposure until it doesn't. But when it if it comes apart, then it's going to really come apart in a hurry. So I don't think you can still have a supply shock, I think, on if we go the Wall Street route, but that's probably because something else goes really, really wrong at the same time to kick that off.
That's super interesting. With daily withdrawal, you mentioned that in the sensitivity of that. Just to understand that, this is what you were talking about? Is this pretty also early in the paper?
Yeah, this is the price sensitivity. So this was just an example of how the parameters on the price sensitivity, this is the range that I used. So the curve down at the bottom just means that if we have that parameter for the bottom curve, it means that Bitcoin purchases are very sensitive to price increases. So if the price goes up, the number of Bitcoin drops. Number of Bitcoins purchased comes down quite quickly, whereas the top curve is the opposite. So there's quite a wide range of assumptions in there. And again, the uncertainty is all accounted for in the second model. So like in this chart, we see, just assuming that there's 2,000 Bitcoin per day, taken out of liquid supply as a baseline. What you can see is that it drops very, very quickly. So the higher the price of Bitcoin, it will cause a withdrawal or a decline in Bitcoin purchases. So think of it like at one end of the switch, it's like 100% Bitcoin. That's the only thing that determines what you're purchasing. At the other end of the spectrum, it's 100% fiat. Your budget constraint implies how many Bitcoin you can purchase. And then in between, we have these different curves that I use in this model to allow for some flexibility along that through that range.
I do love the watches from Coin Vigilante, but today I have a very special message, not from me, but from the CEO himself, Carlos from Coin Vigilante. Let's hear him.
To all the Robin Sier podcast community, I'm Carlos Estrada from Coin Vigilante, and we're sponsors of the show, and we're going to give you a very special discount exclusive to you. 10% off your order at coinvigilante.com when you use Robin at checkout. We have really nice watches that you guys can buy right now for 10%. This is a transparency edition, beautiful watch. These watches are worn in over 55 countries and counting. This discount is just for you, exclusive to the Robin Sier podcast. We have limited editions. We have limited productions. These watches come in very nice packaging, boxing material, and they are collector's item for Bitcoiners only. Enjoy the discount. Thanks for supporting the show and Coin Vigilante.
The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They're also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. I want to tell you about something very special to me. It's called micro seed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With micro seed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because MicroSeed is not selling the washer. MicroSeed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. Interesting. And then also, I think the next one, and people, I think will appreciate that, because the people always want to know, like, where's Bitcoin going? What is the expected market price? And those are like, you made a lot of like graphs with assumptions, and those are then consistent around the paper, which kind of lead to the Bitcoin price, I guess.
Yeah. Now, I actually wouldn't look at this chart for Bitcoin price, and the reason is that, like, a lot of the first, I have two parts to this paper. The first is exploring how the parameters interact with each other. So that's where this particular paper, or this particular chart, really has some fixed assumptions in it. So if you want to, I would scroll back all the way down to the bottom to table 15, which is page 26. Let's see if we can get, should be just up a little bit more. Okay, right there. That's the one. Where did it go?
This one?
Yeah, that one. So this is the accounting for all the uncertainty, and not just across liquid supply in that parameter that we just looked at, the withdrawal sensitivity, but across all the parameters in the model. So how many Bitcoin per day are taken out of exchanges, whatever else I had in the model, how fast, like how soon I forget after I've gotten onto other things for a few days. But all the uncertainties are all rolled into this price prediction right here. And so this one is saying, I like the 75% calm myself. That's where I feel most comfortable. Oh, yeah, you can't highlight individually, unfortunately. But so look at, just pick a year out of there and just highlight a row. Okay, for 2030, the model predicts that there's a 75% probability that Bitcoin price will exceed $2.27 million. And again, the hyperbolic price increases, they sort of skew this table a little bit to the right, which was I don't really pay much attention to the 10% and the 1%. You're getting these monstrous big numbers, but if price goes hyperbolic, you're going to get monstrous big numbers. But that also implies the US dollar basically dies. And I can't believe that myself yet. The numbers down in the 75% column, you're looking at, these are based on 10,000 simulations. So what happens in a Monte Carlo model is every uncertain parameter in the model, say for instance, liquid supply, one run of the model, it will be 3.5 million. The next run of the model will be 10.35 million, and so on like that. And so what we get with the Monte Carlo model is we get a complete sampling of the entire parameter space. So you just mash up and put anything that's you think in the realm of feasibility or plausibility into the model. You run 10,000 simulations, and then you were able to come out with these probability bands. So what this tells us, 2.27 million in 2030, which I actually think, if I giving my personal opinion, I like basing on the math, like I said, but to me that makes sense. And you'll probably have listeners at this time, when they see the pod, go crazy and think, well, that's ridiculous. But I think what's also, if you look at that 75% column, what does it predict leading up to that? Well, this year it only predicts 190,000. And now 190,000, given we're at 100,000, that's, we're 4 months away. That's in the realm of possibility. Maybe we won't make it. Maybe we will. There's probably some people that would be complaining like crazy if we only make 190,000 this year, thinking it should be higher. And then you look 410,000 end of 2026. To me, that doesn't sound that unreasonable. 730,000, and you creep up. And you have to remember, this is the, back to the Doug analogy and the walking analogy, we're in this supply shock, potentially into a supply shock scenario. And we're saying, okay, we're creeping up by 200,000, then by 300, then by 400, then by 500. I hadn't actually looked at it like that before. So we're getting this incremental increase every year. It's not crazy. And I think that the 75% column probably should be pretty representative of what happens if we end up being in this financialized world where Bitcoin's really integrated into mainstream finance and governance. And could we go higher? Absolutely, we could go higher. And the irony is that those big numbers out on the right-hand side of that chart, they're more likely if we have fewer withdrawals. It seems like they're more likely if we have fewer withdrawals. If we were to have a Bitcoin maxi only world where it's completely sovereignty first, the likelihood is actually more that we end up on one of the right-hand columns than the 75% column.
With more maxi world, you mean where there's just people are intolerant with the dollar and just use Bitcoin as their money?
I maybe not even using it as money, as in a medium of exchange, but they're intolerant, is unwilling to accept paper Bitcoin in the market. And like, I don't know if that's for Bitcoin advocates who believe that that's the way to go. I don't know if there's any way to actually do that. So we have all these. I don't like the word subtleties. It sounds like I'm talking like an AI, but there are these subtleties in here that they're hinting at different things, and like absolutely, this model is not complete until it integrates in the futures and derivatives in that supply side. But yeah, to me, like that 2.27 million out in 2030, and like what does it say for the end? It's like just under 5 million by 2036. Like 2036 is like just like a whole, like that's the seventh halving. That's where I picked what I picked as the end of the day. Like, the way that we're going and the adoption in Bitcoin, like that just 4.8 million just doesn't not seem unreasonable to me at all for 2036.
That's and I do, and I love that a lot because there are people that call for $1 million Bitcoin for this year. Like, oh, like no way. Like, and actually, it's funny because your most bullish case with the 1% doesn't even get to $1 million Bitcoin this year. And I totally agree with that. I think if you call for $1 million Bitcoin in 2025, you basically call for the end of the dollar almost. There's something major happening.
Yeah. Or alternatively, so the critical point in this model is around 2 million liquid supply. So once you dip down below 2 million, then you're getting into supply shock territory. But one of the things, also, it's buried somewhere in this paper, but what happens even in the hyperbolic price increases, where your price just goes like literally hyperbolic, it's steeper than exponential. It like hits a U-turn and it just goes straight up. But even in hyperbolic price increases, like there was one scenario that it was like you get down to 2 million liquid supply in like 2030, and then the price it starts to spread. You see that upper, if you look at a chart, you see the upper bar starting to pull away, but it still takes 2 years before it really goes hyperbolic. So again, thinking supply shock and the drought analogy, you can see this drought coming from like miles away, and I think we're going to have lots of advance notice if we hit like a full-on supply shock, which, like you said, implies a collapse of the fiat currencies or the U.S. dollar. I think there's going to be lots and lots of advance notice that we'll see this building over a couple of years. So I wouldn't. Right now, this model is saying. And even without the buffer that the futures and derivatives markets bring, this model is saying that the earliest you're going to see a supply shock is probably 2030, 2031, in that range.
Is there any influence that you look at where when the US is now kind of looking at Bitcoin and the nation states thing? We talked about the strategy and the company side and the institutional side, but is there anything that you're like, okay, what influence and what demand equation does the US has on the strategic Bitcoin reserves potentially?
Yeah, I didn't look at that specifically in this, but now, so one of the cool things with this framework that I have now is that like everything you can change so easily. And so one thing I did build into here, which is roughly the equivalent of the U.S. reserve, is what happens if we had a hypothetical quantum attack on all the Satoshi wallets, like 968,000 Bitcoin is what I assumed. And what happens, so imagine if you had 968,000 Bitcoin that were hacked and they were all dumped in the market in one day, what would happen? And so I took 2030, I think it was a July, end of June, end of July 2030 is the example date, and ran the numbers on that. And the supply side shock was actually quite modest, depending again on where liquid supply was. If liquid supply was 6 million or above at that time.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.